Yo, what's up guys, welcome back to another video. Today is something very educational and something I think everybody needs to know, because I used to think trading was just higher highs and higher lows and all that type of stuff, but recently I've started realizing that's not actually what moves the markets. If you're interested in what that is about, please stay and watch the full video. So you got to think about it. Why does price suddenly break structure? Why does it reverse out of nowhere? I used to say buyers stepped in, sellers took control. That doesn't really explain anything. What I'm starting to understand is price just doesn't move randomly. It moves because money moves. The chart is just showing you what already happened. So what I'm going to do is going to put two pictures up from yesterday of my watch list of the assets I trade. I'm going to put an explanation below or next to both of them, so you can get a bit of an idea of what I'm talking about. So what I've started doing is building a setup around this idea. I'm tracking things like the strength of the US dollar, oil prices, and how money is flowing between the markets. Because from what I've been learning, a lot of global trade, especially oil, is linked to the dollar. So when demand for dollar changes, money shifts across everything else, like the pictures I put up recently. I'm not saying I've mastered this yet, because this is just the direction I'm exploring. I've still got a lot to learn, and I'm hoping to make a series out of this where I teach everybody once I fully understand it. So when you see lower highs and lower lows forming, that's not the cause. That's just the result of money already moving in that direction. Which means if you're only trading structure, you're reacting, not anticipating. Which basically means the banks, institutions, smart money is already positioned for that move before it's even happened. So you're pretty late. Which explains why things reverse straight away and then everybody panics, saying that the market's against them. It's not that, it's just they already know what is going on. I'm still building this out, but I feel like focusing on where the money is actually going, it makes way more sense than just watching patterns all day. You can see on my chart here, these are the assets that I am watching money flow between. The petrodollar, I called it, because the petrodollar is not an actual currency, it's a system that money moves between. So, like I say, when the oil gets a high demand, people demand more dollars because you need dollars to pay for oil. So money usually will move from gold, Bitcoin, things like that, into the dollar for them to buy oil. It can move in different directions sometimes, but I'm going to post a full document in the description for you to download so you can understand all the different way the money moves, so you can set this petrodollar setup for yourself and you can start to understand where the money's moving, so you get a sense of direction before anything happens. I'm not claiming this to be a perfect setup yet. Like I said, I'm still learning it myself. So another example to watch for, if oil is up and the dollar is up, which is DXY, that means there's a strong petrodollar flow. If oil is up and dollar is down, it means the system is weakening or there's a shift in the system. If gold is up and the dollar is up, it means fear plus liquidity shift, and that's a big macro signal. So you can sort of get an idea here for what I'm talking about. So what this petrodollar system here does is it indicates you in what is about to happen next, or what is going on in the world. Oil is the trigger. It tells you that there's global demand and energy pressure. Dollar is the strength, that's the core, is the world demand in USD. US yields is money flowing into the US debt. And gold is the truth detector, fear, inflation, or system stress. If you add all these to your watch list, you can use the 1 hour and the 4 hour as an intraday bias, and then you can use the daily as a macro direction. This is a strategy that I will be using. This is basically the edge of this system. If oil is up, DXY is up, and the US 10 is up, that means country is buying oil, needs USD, and the money is flowing into the US. The weakening system, oil up, DXY down, oil demand rising but USD not benefiting, as system stress. That could indicate that you could buy gold. And you could also look for USD weakness trades. So if USD sells, gold could push up a bit. The crisis, this is the fear mode. If gold is up and DXY is up, that means there's panic, money rushing to both safety assets. That means big moves are coming and volatility trades. If the dollar and gold is going in the same direction, that means something big is happening. Like I say, if you want to study this more, I'm going to put a full document down in the description and the comments for you to download, so you can go over and read to fully understand this. If you want to join a community of traders who study this stuff daily, study economics, you can learn psychology, we post our trade ideas, and just people you want to generally talk to about trading, then join the Telegram in the description. You can follow my Twitter as I post on there daily. I hope this video made sense to you, and that is all for today, and I'll see you in the next video. Take care.